today. Now, the plan for today is I'm gonna have a look at the calendar and see what we're gonna have coming out today. We're going to be mapping out the weekend levels for BTC and ETH. Then we're going to have a greater look at the S&P and the DXY. So that's secondary because they've been sort of doing their own thing. The DXY had been dropping and the coins had been dropping on 1 or 2 days last week, but the DXY has completely nosedived. Like, it's broken through my level of support. It's lost MAs and EMAs. It's in a terrible position at the moment. So that's why I'm putting them after our charts, because it's good to know what's happening in the macro, but the patterns that we're watching or the levels that we're watching for our coins are important, are more important. And then I'm gonna talk to you about the 2 trades that I had this week in XRP and ETH, and they were 2 shorts. And what I want to I've explained how I DCA'd in the short position in ETH. I'll explain how I managed the XRP position this week, and then how I secured my entries. I didn't lose even my 5%, which you can hear it in my voice. I am really happy about, because for me, it was, again, I'm a highly emotional person, so again, trading has helped me not react to those emotions, because those emotions are coming most of the times from a very good place, and they need to be understood rather than transformed into an actor, which is where things can go crazy. So I didn't lose my 5% entries, and I stuck to my technical strategy. I didn't jump in yesterday on those XRP longs. There were plenty of scalping opportunities, and again, it would have been an occasion in the past where I would have jumped in and I would have got my dopamine and instant gratification hit, but that would have built an unhealthy habit for the future, because I have a strategy that works, and letting that strategy go to jump into a pump is not what, again, professional traders do. And we need to understand that the strategy is above all things. Whatever your individual strategy is. My individual strategy, you know it, is the 4-hour swings with the 1-hour entry. Now, speaking about that strategy, I am looking especially for XRP, because there will be bigger volumes for XRP moving in now, with a lot of exchanges allowing both holding and spot trading and also leverage trading. So the volumes for XRP are going to move. And this weekend, today and this weekend, what I'm going to do is I'm going to tweak my charts to see whether I have to change back to 1-hour swings with 15-minute signals to keep on sticking to that 5% stop loss. Because now, with how big the ranges are, no way can I put a profitable trade in with a 5% stop loss when again, it's just even 25% would get liquidated with no stop loss, because again we're in a big space. So I might be looking, I will be looking at the possibility of changing back to 1-hour swings with 15-minute entries, which means that if I'm not watching the trades constantly, I need to have more conservative targets. But again, that will allow a bigger part of my capital to be put in rather than a bigger time frame and less capital and then watching for a DCA. Anyways, I'm just telling you that because it might be part of if I decide to do that, it might be part of the dialogue that we're gonna have next week for the ETH trades. BTC, again, we're going, I think if this is the start of the bull run and we're looking at BTC, I'm just going to explain it to you briefly. If this is the start of the bull run and we're looking at BTC doing, let's say, 120K, that would be from the previous, from where it is right now, a 4x, 400%. Great. But ETH has a lot more space to go than that. XRP has a lot more space to go than that. I will still continue to chart BTC, but I'm keeping my trading capital in the ETH and in the XRP space, because that's where the ranges are bigger. Okay, now let's have a look. Let's have a look at the news today. Fridays can be two things. Either choppy up and down between the high ADR and the low ADR of the day, or they can be very small range up and down, not really hitting any particular levels, just trading sideways. The high to low ADR is the general run for profit. It's when I noticed that is generally towards the end of the month, when the again, probably trading companies will be looking to get the month closed with a profit. So what do we have today? We have the consumer sentiment for the dollar. That's all, and it's a little bit. It's at the start of the market. It's right when we have the starting volatility for the New York session. Having a little bit of coffee. So I don't expect anything but the regular volatility. We don't have the big news. The big news came in yesterday and Wednesday, and it was on Monday. I was telling you that the market is ranging, waiting for the inflation news. That's exactly what happened. On Wednesday we had a drop. On Thursday we had a lift. Now I'm going to start with the daily ranges. We have at the moment the MACD on the daily starting to look like it's gonna go up, and we have the decreasing volumes in sales here. Then we have the stock, the crossing of the stock to the upside, and it's still going to the upside. I think on Monday it was, Wednesday. So it was the drop on Wednesday that pushed it down, because again, I think that was the bear short squeeze setup, and that's where previously I would have had my DCAs in place, but fortunately I didn't have to, because I had great entries for those shorts and I didn't have to risk anything. So on the daily levels, we are now. I'll say something very controversial right now, but it's not unique in the trading world. I don't believe, the way I'm reading the BTC charts, we have not turned 30 and 31K into support. And again, why am I saying it's controversial? Because we are above it, because it's been resistance for a while, and because it looks like today it's staying above it. When I'll show you an example when something is turned into resistance, into support, sorry. Here, so that you see what I mean. Now this place here, the previous the previous pause between the previous 4 and 5 swings for the bull run. So we had resistance. We had resistance here. It got tested, and again, I'm on the same daily time frame. It got tested. It closed above it for 2 days, then went back below it. Now this is where it breaks it, and it continues to move on. So this to me is the break of resistance. So step 1, we break resistance. and we turn it into support on an event like this. So we move up 30%. So we make a significant move from that space, and then we come down and turn it into support. Now, this is not relevant for our intraday traders and even the 4-hour swing traders. Why? Because we are taking different signals. But for our macro picture of where BTC is and where the market is, and I know what XRP has done. XRP was long overdue that, to be honest. It's been held back. It's a particular case with an SEC case. But to look at BTC and see where it is right now, we haven't turned it. Yes, if we go to somewhere between 35 and 40K, again, I have levels within levels here. The bigger level would be 40, smaller level would be 35. So if we go to 35, but 35 would be quite modest. It would be, though, the technical measured move of this consolidation. So 35 would be 12%, 40 would be 27%. So if we go up to 40 and then come back to 30 and hold that level, that to me is an excellent sign for continuation into the bull run. And I'll say bull run for now. I can say that's my happy XRP voice. I'll say markup to avoid emotional language. But this would be the lift. I was testing this divergence, but it's not. It wouldn't go back to there. So we would need something along the lines of what happened. I'm going to move this line here. So what happened here, the way it moved out for 27%. So what I'm trying to say, again, for the general analysis of the market is, this to me is not the flip of resistance into support. These 3 days above the previous resistance is not flipping it into support. It flips into support when we see a move away from the range and then a back test that holds. And again, I'm looking at the daily, so ranges are somewhere around 20 to 30%. 25 was the previous case, and 27 was the previous case, and 27 would be up to the 40 mark, which is, again, it's a level that I see it reaching. So just to be again, looking at the macro and where we are. However, for the 4-hour traders, yes, there has been a lift. Yes, we're holding support. If you've opened longs along the 20 EMA, let me just change this. If you've opened longs yesterday when this 20 EMA got hit, we didn't get a 702. We got a 702 previously here. So here was a nice, not a 702, a golden pocket. I'm pretty sure it is a 702 as well, but a golden pocket for sure. So this would have been a super 4-hour 1-2 for the lift. But again, everything was pointing down. So if you did get an entry after the confirmation of the 20, you would need to put your stop loss below this. It might be quite costly. So at the moment, I believe it's worth waiting for another 1-2, either on the 4-hour or on the 1-hour time frame. So I would be looking for the 1 hour to reset and then to continue. Let me see how the 1 hour is doing. The 1 hour is back testing the 20. Usually the 1 hour back tests the 55 and then pushes up. Okay, we are above the 20 on the 4-hour. Momentum is going. Let's have a look at the daily levels. Let's see if we have a possible daily entry today. We have the low ADR. Look where the low ADR is. Very nice. The low ADR is back testing the previous resistance here in this swing. Now this is also, we need to be mindful that this could also be considered a 1, 2, 3, 4, like a zigzag. I know we're crossing the lines here, but we are in a zigzag consolidation pattern. Usually the how I count my waves in consolidations, and again, Elliott wave people will be cringing. I'm looking for 3 peaks, 3 bottoms, higher lows, higher highs, and we're coming down for a correction. So to me, this is a consolidation. Usually, again, because we are above all the daily levels, I can't say it's a consolidation for the down because we're in a sideways channel. So these sideways formations can break to either side. And because we're holding daily levels, it is more likely to go to the top. So what I would be doing here if I were trading a BTC, I would be waiting for a golden pocket or a 0.5 correction. So somewhere along here. 38.3, 38.4. Let's see if that corresponds to something on. It's 38.4 is the psychological high. This has been tested many a time. I think the 200 EMA on the 1 hour at 30k 500 would be a good bounce for a continuation of this lift. And again, this is where I would be watching to see something like this, a double bottom structure, a 1 hour push down, and then maybe 2 hours lift, and then come down and then lift. And that maybe will also reset the stock more to the downside, because at the moment the stock to me is a little bit worrying. We have had 1, 2, 3 peaks, 3 pushes into the overbought, and none of the resets at the bottom here. So again, this would be the long in line with the long trend on the daily. Could there be a short opportunity? Yes, there could be, but the trend is your friend as long as everything's holding on these time frames. I would be waiting for the break of the 20 on the 4 hour. So if I were to do a short right now, I would be waiting for this to break. Basically break. that was high pitched. I know I have a high pitched potential that took me by surprise. So basically what I'm waiting is for this to break the 20, back test, and here in that back test, when it goes a little bit sideways, is where I'll be switching to the 1 hour time frame and taking an entry. I would be waiting for that 20 back test because it always happens. It gave me an excellent entry. No, I'm looking at the BTC. I thought it's gone. Stupid branch. So it gave me an excellent entry for ETH, gave me an excellent entry for XRP. I have no reasons to believe that won't happen. So that's where I'm looking for short. I'm no longer trying to catch this to see this lift turn into a short, because at the moment we are looking at continuation to the upside. Everything's holding for that continuation. When the support breaks on that continuation, I'm gonna look for shorts. But at the moment, as long as support is holding As long as this 20 is holding for support on the 4-hour and the daily, we're going to continue up. Now, it might not be a super duper lift. It might just be to 35k, 40k, but it's still, this is the trade to be made. The 4-hour stock is down, indicating downward momentum. So was yesterday. That's again, that was one of the things that was very, very volatile. But we need to see the support break. So the stock can flip if you look at what's happening in this consolidation. And I'm sorry I'm making this a little bit more technical today, but again, because things are starting to move, I'm thinking about preparing for the next trades to come. So look at what happened here. The stock turned and then it did a higher high and then it continued to be ranging until this happened. So it was the break of the 20, closed 2 candles below the 20 EMA. Yes, there was a backtest of the VWAP. There was some volatility here. This probably gave a nice golden pocket entry. No, not on the 4-hour. I take that back. It only did a 0.5 on the 4-hour. Let's see if the 1-hour swing was a little bit more generous. No, it was only this one here that gave it. Yeah. But anyways, that's when it wouldn't give you the golden pocket entry. You would have to let that go and try to get the golden pocket entry at the bottom of the range. So you'd have to wait. And in fairness, look, it doesn't reach your target and flips to the upside as a higher high just to knock you out, and then comes down. So yeah, wait for the trades where you have clear entries. All you need is a 100% every month to have an exponential money making machine. So that's why I am so calm about letting a trade go, because I know there will be another one. And again, here we've been, the reason why I stopped trading BTC is, look, it's 4.4%. This is not worth my 4-hour time. This is a trade that is a 4-hour trade, is in the range of 10, 15, even now in this bear market, 10, 15%. So it should give me the target. And even if I let that initial confirmation range go, it should give me a nice profit. But 4.4% is not a nice profit. And you'll be in this Monday to Thursday, 3 days. It knocks you out here and you're up and down in the sideways with 30 max 40% profit. Anyways, let's map out the ranges for the weekend. So this is gonna be a 20-second thing. So because we've been doing all this charting and watching and adjusting as price action went along, there's not too much to map out. I'm gonna leave this as is right now with a lift out of this wedge. And yes, you could be saying that we could be here back into the wedge. Yes, you could say that. However, the reason why I'm leaving it here for today, in other circumstances I might change it, is because of how neatly this got back tested. And it is in line with the 20. There we go. With the 20 EMA on the 1 hour. So as a 1 hour, because this is, I know it's a 4-hour time frame for duration, but it's a 1 hour range for consolidation in percentages. I'm gonna leave it like this, and once we break, again, I'll take my confirmation on the 4 hour. Once we break the 20 and we break back in, I'm gonna be looking for a downtrend to start. I won't hold my breath for that though. So the trend is your friend, and the trend at the moment is up. You can wait for a back test, see if it gives you that 1-2 on the lift, take it and go with it. Even if the stocks, even if momentum is gonna seem to be pushing down, if the support is holding, we're continuing to the upside. Okay. So the ranges for the weekend are the targets of this consolidation. I'm going to map out a downwards target as well, because we always need to be to practice equanimity in the face of direction, especially when we are in this sideways range. There we go. Now here, when we're doing a 4-hour trade, we're doing a position trade. We're doing a position trade that even if it has a couple of reversal, how can I say, initiatives in the meantime, personally, I'm not looking to take profit too soon from that 4-hour trade, because that 4-hour trade will take days, maybe even a week to finish, and it will be a 10 or a 15% move. So if I'm gonna open a 4-hour trade, after breaking the 20 in this region, I'm gonna hold that position open for the next level down, which would be 26. 28 is my target, the measured target of the move, but I'm gonna keep it open till 26. So that would be a 10% move, because that would be the 4-hour swing correction. If we're looking at this big massive swing here, this 1 2 3 4 5, this hasn't corrected to anything, and it has had the 1 2 3 4 5 anatomy. I'm not going to show it to you because I've showed it to you so many times. So that's why I will secure my stop loss, and that's why I did what I did this week as well. I chose to keep my position open and not secure a 20% or a 50% profit. I'm not interested in that. When I'm doing a 4-hour trade and it's looking on the hourly and the daily that we're gonna have that target, I will secure my position. There's no need to risk anything. I will risk manage it, but I won't act on the fear of losing the profit, because I'm not losing the profit. I'm losing profit when I'm closing a position too early on the 4-hour time frame. That's how I see it. And it took me a while to do it, because I switched from trading the 1-hour swings to the 4-hour swings. And on the 1-hour swings, you need to secure profit a lot sooner, because it goes up and down, up and down. But a position on the 4-hour shouldn't be closed so early, because you risk losing major profit. And I used to do that. I would close a position with, I don't know, 40-50% profit, and I would be missing out on the extra 10% or 8% because it went down to the next level. And I just saw signals for reversal, but those signals were 1-hour swings, not 4-hour swings. So that's why right now I am being a lot more patient, and I choose to keep that position open, secure the entry, but not rush back into anything after that entry has been closed. So Oh, look at me. It's 30 minutes into this. This is the range. This is the range. This is the measured range, the most conservative range. And of course, we have 35K to the top and 26.6K to the bottom. The bigger space that this could be moving in. Okay, that's BTC. Let's do the same for ETH. It won't take long for ETH because, again, it's moving in the same space. It's a little bit behind. It's a little bit behind because it hasn't yet put in a higher high. We're waiting on that higher high, but it is moving very nicely. It's got a healthy progression that it's doing right now. I don't see it stopping before it reaches the 20,046. That was my entry. That was my stop loss. Got knocked out. Now, why did I choose to have that position open? Because it only took 2 4-hour candles for this to knock me out. First one closed above the 20. Second one, I was waiting for it to do something like this, reject and push down, but it didn't. It went up super duper fast. So with ETH staying below the 50, below the 20 had crossed the 50 down, it was pushing down onto the divergence line. So it was pushing down strong onto the divergence line. But it didn't break it. But again, I chose to keep the position open because my TP was here, so it would have been a 10% move. The biggest it gave me was 6%. That was super. Then the next double bottom was 50%. And I did have a choice, take that 50% or wait for that 10%. I said my entry is way too good to close it at 50% when it looks like for 1, 2, 3, 4 times we've been pushing on this and we can't turn the 20 into support. But then it did it, knock me out again. It's part of the trading operations, I'll call them, because it's not a game, it's a job, and it has operations. So this would be the operation of securing your entry. Now, we are above support level here. I'll say the same thing as I did for BTC until ETH does a 2300 target and then comes down and back tests the 2000 level. The 2000 level is not flipped into support because that's what it did here. Broke, and at back test it failed and it continued to drop down to the next level down. So I'm going to move this down to reflect the new areas. So that's what happened here. It back tested. We don't have a crystal ball to know what's going to happen in the future, but this is the space that we're going to be moving in. Now I'm going to remove my trading cues here. And this would be our weekend space as well. Again, same as for BTC. I'm going to include only the measured targets of this wedge. I am being very conservative with this wedge because this wedge, there we go, because I've taken the target from, let me just adjust it ever so slightly. It was a less open wedge, but now it is a bigger one. There we go. Yes. Okay. So at the moment, I'm waiting for the 2040 to be broken, and I'll see what it does there. I'll be very patient. For the 4 hour trades need volume. So I'm very patient. I take positions towards the opening of Asia on Sunday. So on Sunday, I chart every day in the morning. On Sunday in the morning, I do my charts. Halfway through the day, I go back to the charts and I see if I had because Sunday is very spiky. Sunday is the first day after the psychological levels have been set on Saturday night. They're the high and the low, the first high and the first low of the week. So Sunday is quite spiky because it tests those levels. And I'm waiting for those tests to be made to take a position. If the psychological low is being tested, then I'm gonna look at probably taking a long position. If the psychological high is being tested and it fails, I'm gonna look at taking a short position. But the point I'm trying to make here is don't rush into trades at the weekend. I wouldn't be rushing into trades at the weekend. I would just let this settle. Again, this is the peace of mind that a hodler has as well. So if this is going to go up, the hodl is going to go up as well. And if this is not going to go up, then it's probably going to go into consolidation, and that consolidation will be resetting some MAs, some RSIs. Something will happen. And I know I'm not saying anything, but at the same time, I'm saying exactly what's gonna happen. Nothing big is gonna happen this weekend until we have big volumes, and the big volumes are the big guys that are trading. Today is the final day, and then coming into the market back on Sunday. So yes, if we close today on a high, retail might rush in and put some money in. And that's when the algorithm usually sells, because you have the market maker algorithm selling to retail. So enjoy your weekend, take a break, a nice, how can I say, a fresh perspective when you're charting and not trading is essential. The breaks between your trades, the pauses that you make to reflect on what went right, what went wrong, why something happened, did you miss something? Are essential. And again, we're looking at let me check. I can see a little message there, but I don't want to change the. We're looking at probably sideways weekend until we see a big move on the part of ETH and BTC. Okay, super. You're very welcome, Lee. Now, okay, so these are the ranges for both coins. I've said it very, very frequently, 90% of the time, they go together, ETH and BTC. Why am I trading ETH? Because the ranges are better, and also because I like the way it sets the levels. Lately, BTC has been a bit odd to trade. I'll say odd to trade lately. Now, I will have a look at my trade, the one that I did for XRP. Now, I don't have it marked in the charts, but I know it. This has been to me, again, I'm this market, and it's not just me saying it, it is again people that have been in the market for a while. This has been an absolutely horrible bear market. It's been long, protracted, a lot of sideways, a lot of stop loss hunts, a lot of things to learn from if we're looking at the glass half full. If you've been hanging in here for the past 2 years and you are still surviving, you're still making money, you haven't lost all your funds, do not give up on the next year and a half, because if this is the end of the bear and the start of the bull, it's gonna be a very different wealth status for you at the end of this. I think everybody that has been watching this will tell you the same thing. So I'll show you my XRP trade, and I'll show you what I was waiting for. I'll show you also my levels. It's a little bit of XRP TA now. Here we are right at my next level of support and resistance. Now this is a little bit odd because you see where we have here 140 for XRP, we would have a higher high for BTC and ETH. So its anatomy is slightly different, but here we are reached peak level formation, support, resistance, and we are in right now the golden pocket retracement. So the golden pocket is where we might get rejected from and push lower. We know that $1 for XRP is big. That would be the 702 at 109. Let's see if we can get there. According to my levels, I don't think we're gonna get past here without a correction. And this would be looking, let me just there we go. I don't want to remove that. I want to remove the indicators, the MAs. We would be looking at, again, I know, no, here. I would be looking at something like this, like a 3 peaks, 3 bottoms, we correct. And I know it looks, again, it doesn't look like an impulse wave because I don't believe it's an impulse wave. And yes, it is a beautiful Wyckoff accumulation. And here's where I would be watching for a possible retrace. So usually the lift off from the Wyckoff is a nice channel. That channel would be this, in my opinion. Between these two, we've reached 1, 2, 3, 4, 5, 6. Wherever this takes us, but this is how I see it. Again, I'm on the daily time frame. Now, I don't want to do too much XRP analysis because we can all see that it's holding the daily levels. It was absolutely brilliant what I did yesterday. However, I want to show you how I traded this on the 4-hour time frame, and I'm trying to find the best chart for this. There it was. Okay, this was my trading chart yesterday. I was so ready to pivot. I was so ready to pivot from my short. That's why I had my entry at my stop loss at entry. I was so ready to pivot because I had been watching this triangle forming and going, oh, look at this, it's forming. I'm ready for it. I know it's going to come out and then back test, and I'm ready to pivot because I've seen it done so many times. I'm going to take that 1-2 for the long. There was no 1-2. There was no 1-2. That 1-2 did not happen. So this is something that I slightly redid after yesterday's lift, and I'm happy to bring the lines back as I was using them. So this was the range that I was looking at, and here is where I had my entry with 70% of my capital. 49.12 was I got it on a Saturday. Monday. Here, sorry, not a Saturday, on a Sunday, because it was late. It did the back test. So here's where I got my entry. Had my stop loss 70%, 49.12, super duper. And then I was watching to see what it's gonna do. And I couldn't do a 702. Let me just, that's it, super. And I didn't take a 702 because they didn't give them to me to DCA the rest of the capital. So here's where I went in. I knew it was a bit odd that this didn't break the previous one, this didn't break the previous one. Here's where I DCA'd the rest of my capital at 47.8. Here, it gave it to me. You can't see it because these are 4-hour candles, but here it is. Again, it was at resistance, so I went into short at resistance, DCA'd in at resistance in the apex, and my entry was 48.61. So my entry was somewhere around there. Put a fib, look at that. Okay, so my entry was 48.61 after DCAing. Now again, I love my W's and I love my M formations, but they have been failing terribly on me lately in this consolidation. Everything fails. Everything fails. That's why risk management should never be a negotiable for your trading strategy. Your stop loss should never fail. Because all these patterns and trend lines, and they all fail. You can do everything right and you can still have a trade flop, and you can do nothing right and still have a great victory. But what you should be reinforcing is that positive strategy behavior, because that's what gives you longevity. And yes, like it is a very longevity focused, especially in the first. I think I thought it would take 2 years, but I would say 3 to 4 years to get through a bear market and a bull market. I think that's when you really become a seasoned trader. Okay, so here we are. Here was my stop loss and entry. I had a super entry here given to me. I took my profit here from the previous short. Didn't enter here. I didn't enter here. I was waiting for the liquidity to come in. So that's why I'm so, to me, the way I executed this was where I plan on staying as a trader. So I waited for the liquidity. I waited for, again, a rejection along the divergence line to DCAN. I was brought back up here. I could have, how can I say, taken a little bit of profit, like 20%, but I chose not to because I said I want to give this its whole space. And its space, unfortunately, it knocked me out almost instantly in like 5 minutes. I was watching this. So the reason why I was not willing to close my position is because I was waiting for a 29% drop. That would have given me a very nice profit, 3x in a month. Fantastic. So no, I will not close a position like this at the end of the apex when I have managed to put in all my capital for this. What I would do is secure the entry and then go 1, 2, and up we go. But right now we're up here and I need to redo my charts. I need to go back to where something like this happened, have a look at how this progressed, have a look at the daily levels and check to see what I need to do to start trading this, because this is quite different from where ETH is percentage-wise, space-wise, movement-wise, and I need to be a little bit more careful. Okay, so that was it. That was next week on Monday, if we don't have any sort of events happening, I will be preparing something that I plan on doing, and I promise you I'm going to do. I'll be preparing the bear and bull traps along the 50, and I will be looking at the 4-hour and at the 1-hour MAs. So the 50, just to tell you shortly, the 50 is where bear and bull traps are set. This one was one of them. I had at the back of my mind that this might be it. That's why I've stayed really cautious and protected. Well, cautious not the right way to, yeah, to say it, mindful more than cautious. So that was it. So that's what I'm gonna do on Monday. So I will be doing that bear and bull trap setup, looking at previous setups, and I'll do it for XRP and ETH because that's the coins that I'm trading. Ooh, what do I need to do now? I need to do the S&P. Just a quick macro look at the S&P. Again, Raul Real Vision, Raul Paul's channel is wonderful for that because I get to see what, again, people with experienced traders are saying. So this is the S&P. And what they are saying is that, again, they're twixt in between. Is this a bear rally, bull rally in a bear market, or is this the liftoff? They don't know. And if they don't know, I give myself the humble permission to say I don't know either. We have a multiple range of divergences on the daily. And what they're saying is basically something that I think we need to keep in mind for our coins. It's still the summer. It's still the summer. The economy is still uncertain. We might see some more sideways. They keep saying there's a higher high, it knocks people out of their positions, and then there's ranging. And they're right. Like if we're looking on the daily, that's exactly what happened. Exactly what happened here and exactly what happened here. So they're perfectly right there. This is exactly what's happening. However, support is being held. Let's have a look at the 1 week for the SPX. The 1 week has been down on the stock. Still has space to go in the overbought. It still hasn't. Like look what happened here in the previous bulls. We're not there yet. We're not there yet. We could, and these are weeks. We stayed in the bear divergence territory for a year and 2 months. So that's what we should be. That's what should be happening in this sort of parabolic. This is a parabolic lift, and again, setting up a parabolic curve is the thing to do here to trade. Parabolic curves, by the way, are equally technical as our levels because they're exponential, but they still have steps. They have 4 steps, which are equivalent to our 3 levels. Okay, so the S&P is at the top. It could stay here, consolidate, reset some dailies, and then continue on the weekly into its bull run. It's not yet in the bull run, in my opinion. We are not in the we haven't been to a parabolic stage, and we're yet to get there, and that's going to continue. It's just days on end of lifting. But the main takeaway is we could still be going sideways where we are right now. So we're not going to fly to the moon from where we are right now. We're going to still keep going. We could still keep going sideways until summer is over. Everybody's sort in time-wise. The people I keep listening to are referring to it as the 2024 bull run. So we could be half a year away from it, but we are still building up funds for it. So here's where the DXY is tragic. It is tragic. However, it is coming close to a weekly support and resistance level. This is one of the back tests. This is one of the back tests that I was telling you about. If I see something going up high like this and then down like this, and this level holds for weeks, because we're talking about weekly levels here, If this level holds for weeks, this is looking great for support for another challenge of the peak. Either a 1-2 for the down or a higher high. But we need to see. At the moment, we haven't reached it. It is a range that we have reached. So yes, I could be moving this a little bit higher and say, okay, we've reached it. But looking at the weekly stock, we're not there yet. So we're not bottomed out. We have some bullish divergences here. But again, look how many it takes to actually start reversing. Okay. Let's switch to the daily so that I show you where we are. The daily stock is, to me, ready to lift, but we need to see some bull divergences on it to be a little bit more sure. And of course, we need to see some holding of 20s, and we need to see some holding of the 800 EMA on the daily. So we have the 800, the 20, and the 200 EMAs. We need to see all of these because this is where we started. This is where we started last week, Thursday, and here's where we are a week later, breaking through all of this consolidation. So all of this goodness here was lost in a week, and we lost support and did a lower low, which is the opposite of the higher high that happened with the stocks. And with BTC, this higher high on the daily. So it didn't go hand in hand with the DXY. Like it didn't happen in a super coordinated way, but it did happen eventually. So what that tells us is we need to be looking at the DXY, which is what we've been doing. It's not like I have dropped it, but we need to be looking at the DXY for the greater macro perspective. That is it from me. I will be posting these levels on the chat. Do let me know if you have any questions. Again, if you're trading BTC and ETH, you're in more stable hands with XRP. I would be taking, which is what I'm going to do. I would be taking the next few days to map it out and see what are the levels that it's going to be moving in, because we've opened a completely different space. No position is a position as well. You're winning if you're waiting for a higher probability entry. That's what I did last week, and it gave me super entries. The trend flipped